The market you're trying to beat isn't a person. It hasn't been for a long time. It's a machine, thousands of them, reading every tick, reacting in millionths of a second, never tired, never emotional, never asleep. Algorithmic trading is already a $43 billion industry by the end of this decade. On a normal day, machines drive over 70% of equity volume and more than 80% of crypto. The order flow you're swimming in is mostly bots. So here's the real matchup. On one side, human instinct, a single chart, and a gut feeling. On the other, infrastructure that sees the whole market and acts before you finished blinking. For years, closing that gap required a quant team, a data budget, and engineers on payroll. Millions of dollars just to enter the arena. That's the part that broke. With Claude Code as the engine, one operator, you, can now build the same class of system the funds run. Not a watered-down version. The real structure. 4 systems. Charts that read themselves. Trades you place by talking. Intelligence pulled straight off the blockchain. And a server that runs all of it 24/7 without you. I built every piece. And I'm going to show you exactly how each one works, end to end. There's no secret indicator in here, no crystal ball, just speed, structure, and discipline engineered into software. Let's build it. We start where every trader starts, the chart. Except we're going to stop reading it by hand. Instead of squinting at levels, I hand Claude the raw price history, just a file of candles, and ask it to find the structure for me. It reads every candle and does the thing your eyes can't do reliably. It counts the touches on each level. Because a line price touched once is noise. A line it respected 9 separate times is a wall. Claude ranks every level by how many times the market actually defended it. Pure conviction, no opinion. Then I push it further. Confluence. I have it cross-check those levels across multiple time frames and keep only the ones that hold on all of them. One strong level beats 10 weak guesses. Now, the part that used to take a weekend. In plain English, Claude writes the full Pine script strategy, entries, exits, alert conditions, and drops it onto the chart. With a backtest attached, so you can see how it would have behaved before you risk a cent. Here's the problem, though. A chart that just alerts you is still manual. You still have to be awake, at your desk, fast enough. So, we close the loop. This is the Webhook bridge. When the strategy triggers, TradingView fires a webhook, a real-time signal, at a small Python script. That signal carries everything. The action, the asset, the size, the stop. The script reads it, talks to the exchange's API, and opens the position. Instantly. Automatically. Whether you're watching or not. And look at what happens before the order goes through. A risk check. Position size, stop loss, total exposure, all validated first. The system is fast, but it is never reckless. Run it on a testnet until you trust it. Speed without discipline is just a quicker way to blow up your account. Sometimes you don't want to chart at all. You want to talk to your account like it's a person standing next to you. So the second build wires Claude's API into Telegram. I send a message in plain language. Open a 5x long on ETH, $10, stop loss minus 3%. Claude parses the intent, pulls out every parameter, and converts it into a precise, structured order. Natural language in, an exact trade out, and it confirms before it fires. One tap. Nothing executes behind your back. Ask it for a dashboard, and it pulls your live account data and compiles a full risk picture on demand. Open profit and loss, equity, open interest, the funding you've paid. No spreadsheet. No digging through the exchange UI. One message. Full clarity. And because the rules live in code, it protects you from yourself. Ask for something reckless, 50x all in, and it refuses. Your discipline is no longer a feeling you have to summon at 3 a.m. It's enforced. Now the quiet edge most people walk right past. Funding rates. On perpetual futures, longs and shorts pay each other a small recurring fee to keep the price pinned to spot. I have the bot scan every contract and surface the highest paying ones. Hold both sides of the same asset and your price exposure cancels to zero, but you still collect that funding payment every few hours. You're not betting on direction. You're harvesting a structural payment the market hands out by design. That's yield. Engineered, repeatable, direction neutral. Not a gamble. The third build is the one that genuinely feels unfair, because the edge is just sitting there in the open, and almost nobody bothers to pick it up. Hyperliquid runs on its own public ledger, which means something wild. Every position from every wallet is completely transparent. Nothing is hidden. So I point Claude at the public endpoints and have it pull live data across more than 33,000 traders. Then I have it do something humans never could at this scale. Judge them. It sorts every trader into two camps. On the left, the 20 most profitable wallets, the whales who consistently win. On the right, the 20 most reliably losing accounts. And here's the key. Both are signal. The winners tell you where smart money is leaning. The losers tell you exactly what to fade. Claude weights them too. A bigger position from a wallet with a long winning history counts for more than a small bet from a coin flip account. Conviction, quantified. Then it hunts for the rare alignment that matters most, divergence. A token where the proven winners are net long and the proven losers are net short. When the people who are usually right and the people who are usually wrong take opposite sides of the same trade, that is one of the highest probability setups in the entire market. And no candlestick pattern, no moving average, no chart on Earth could have shown it to you. It only exists in the behavior of the players. Claude runs the whole scan and hands you a ranked list. You've stopped reading the market. You're now reading the people inside it and trading against the ones who lose. None of this is worth anything if it lives on your laptop. Close the lid and your edge dies with it. So the final piece is infrastructure. I move the Python bots off the laptop and onto a cloud server. Now they run 24 hours a day, 7 days a week, through the night, through your day job, through the weekend you're not watching. The market never closes, and now neither does your system. And sit with the economics for a second. The institutions pay millions for this. Your version runs for the price of a couple of coffees a month. Same structure, a rounding error of the cost. It's also built to survive itself. If a WebSocket drops in the middle of the night, self-healing code catches it and reconnects before you'd ever know it happened. No babysitting, no missed signals. And every single morning, before you're even awake, the system writes you a briefing. It summarizes the overnight whale movements, the status of every chart you track, and hands you one fully risk-sized setup. Entry, stop, size, done. You wake up to a desk that already did the night shift. That's the whole system. Charts that read themselves, execution by sentence, intelligence pulled from the chain, running on a server that never sleeps. It was never a prediction machine. It's an infrastructure. Your edge isn't a secret signal somebody sold you. It's speed, structure, and discipline working while you don't. I'm not going to make you rebuild this from a video. Every file, the chart reader, the Webhook bridge, the Telegram bot, the whale scanner, the Pine script block, the dashboard template, it's all sitting in the Alpha Cartel Discord. Clean boilerplate, ready to clone and run. Build the system, trade the structure. I'll see you inside.